What do you know of the Be Your Own Bank systems?
The Be Your Own Bank (BYOB) system is a concept often associated with financial independence and leveraging certain strategies to manage and grow personal wealth. It typically revolves around the idea of taking control of your finances without relying on traditional banking systems. There are a few variations of this idea. One, infinite banking concept, IBC. This approach involves using a whole life insurance policy with cash value as a personal banking system. People borrow against the policy, use the funds for investments or expenses, and repay themselves with interest, growing the policy's value over time. 2. Decentralized finance, DeFi. In the cryptocurrency world, Be Your Own Bank emphasizes using blockchain technology and decentralized platforms to manage and store funds. It eliminates the need for intermediaries like banks, offering tools like wallets, peer to peer transactions, and earning interest through staking or lending. 3. Cash flow management. Some interpret BYOB as creating systems where personal cash flow, such as through investments, side hustles, or real estate, replaces traditional bank dependence. Do you have a specific system or aspect in mind?
I was wondering about the ones where you put money in and you're able to borrow it out, especially the one I heard of that you can actually take more out than you put in temporarily.
You're likely referring to systems like the infinite banking concept, IBC, or certain strategies in decentralized finance, DeFi. One infinite banking concept, IBC, in this system, you use a specially designed whole life insurance policy. You build cash value by paying premiums, which you can borrow against. Here's the interesting part. Even when you borrow, the policy's cash value continues to grow as if the money is still there. This compounding effect creates the appearance of taking out more than you put in over time, especially if the policy is structured properly and held long term. 2. DeFi protocols, cryptocurrency. Some DeFi platforms let you deposit assets as collateral and borrow against them, often at a higher value than what you deposited, depending on the platform's rules. For instance, protocols like Aave or MakerDAO allow over-collateralized loans, but because of volatile crypto prices, the perceived value might exceed the initial deposit under favorable conditions. This system can also generate passive income through staking or lending rewards, further increasing value. These systems carry risks, like the complexity of policy management in IBC or market volatility in DeFi. Were you leaning toward one of these, or did you have another system in mind?
Yeah, probably one of those. The one where you put money, the infinite banking one. I'd heard that there's another one where you put in, let's say, 5,000, but you can pull out maybe 10 or more to start with. Is there one like that?
Yes, the scenario you're describing aligns closely with premium finance life insurance or certain advanced strategies within the infinite banking concept IBC framework. Here's how it works. 1. Premium finance life insurance. This involves borrowing funds, often from a lender, to pay for a high cash value life insurance policy. For example, you might personally contribute $5,000, but secure financing to fund a much larger policy, say $10,000 or more in premiums. The policy builds cash value quickly and you can borrow against it. The idea is that the policy's growth and tax advantages outpace the interest on the loan. 2. Supercharged infinite banking strategies. Some versions of IBC are designed to maximize early cash value. These policies are structured with a higher proportion of the premium going toward the cash value via paid up additions riders. With aggressive funding, you might put in $5,000 and access a significantly larger amount because